All right. So this is episode one of the algorithm trading concepts. Gonna be doing just three assets today: Dow Jones, Nasdaq, and my favorite, gold. All right. So let's get into the meat of the matter right about now. First and foremost, I'd advise every single young trader to throw away all of your indicators. And those who are still struggling, get rid of your indicators. They're not gonna help you. All you need to do is take a look at yourself, understand the psychology of the markets, and realize that it's all about where the money is at, your risk management, which ties into the money liquidity market pool, and also what time are you trading the market. It's all about time, price, money. Everything ties into that. Your first step of every single trading week is to do a review of what took place the previous week, that we have a better understanding and the idea of what is coming up for the new trading week. You can do this by simply marking the high and low of the previous week, but also take a look at where the previous market players are located in the market versus where you are planning to enter, and whether or not it's a wise decision to enter at that present moment. Now, I know that was a lot to take in, so I'm just gonna have to break it down piece by piece, and I'm gonna do it again and again throughout these different various assets. So please remember to subscribe, leave a comment, and share the video. So the template is there. All I have to do is apply the template, stick to the rules, and remain calm. That's a key component of the psychology. If you do not stay calm, you're gonna be in a lot of trouble. You're going to move your stop loss foolishly, because most of the time, many of you are gonna place your stop losses at areas where you're gonna get stopped out. And I'm gonna reinforce this right about now. That way, you don't end up making the sad mistakes that many traders make. So I'm on Dow Jones Industrial. We're gonna start off with this one first. So what should I do first? The first thing, as I mentioned, I have to get a data. So simply put, I today is Monday the 10th of November. So simply put, I can mark out where the market price started from the previous week. All right. So let's find the third. Cool. Let's find the third. I remember the first week of every single new month is called the first of the month, FOM period. I'm gonna go on the 1 hour chart right about now. It helps make life a lot more easier for me. So as it stands right about now, time price formula, I have to mark out exactly where the week start. Now there are two concepts you can use. You can use the Monday open or the Sunday. I'm gonna work with the Monday for you guys. In other tutorials, I'm gonna mark out the Sunday one. So this is Monday opening. Now let's sketch the last day of the previous week. Let's sketch the Friday. All right. This concept, as I said, is going to assist many of you greatly. Now, quickly, this is Monday, this is Friday. All right. Let's sketch where Friday comes to an end. So I get all the way up to where the market price went in terms of overall price movement. So we saw what is established. We saw market price establish a high area for the week. And Monday gave us that high. And we saw market price establish a low area for the week. So Friday gave us the low. Perfect. Now, the exact high of Monday is right here. Just place it at the open, but I'm going to put at the exact high. So we have something being told to us right about now. So the previous week was a bearish week. Massive price sell-off. Now we can see on Friday where buyers entered the market, correct? So around this area, buyers present. So let's put B for buy. And then after that, next part of the algorithm, you locate where the stop losses of the current players in the market are. So if I'm a buyer that entered on Friday, I'm gonna put this here not to cause any confusion. I am currently in profit as of this time. I was deeper in profit earlier in the early and opening hours of Sunday going into Monday. seen a little bit of a sell-off. Now, what you need to take a look at now, brothers and sisters, boys and girls, take a look at the impulsive move the market price made. So we have gone from collecting data from the previous week and understanding where the majority of the price action took place to now establishing what we call the new market data. Now, in the new market data, we have the current week open, but first and foremost, given that this is a sell-off, we understand in simplicity that the market price has dealt us a proper range. Now, because the market price has dealt us a range, two things can happen. Either A, market price is going to respect this range by staying inside of it, or market price is going to break out of this range. We understand that the market maker's job is to collect liquidity. So because he's going to be collecting liquidity, there is a maximum area on each range, an equilibrium point on each range, and a starting point. So given that this was a sell-off, up here so would be the proverbial starting point 0. And after that, we can quickly start to identify the median point or the halfway point. And then where the selling stop or the current order flow move stop, we can call that point the max out point or the 100. Work with me now. So what we have done is that we have established a ruler of sort. And this ruler is greatly assisting us in our overall analysis. Now, I'm looking for a potential continuation of a buy-off. There are parameters on my current trading day, which is today, Monday, that I can look for. Now, first and foremost, or should I say in continuation, I have to mark out the highest year market price made for today. The 2 days in the week, the market price can be expected to establish a high and a low are Monday and Tuesday. And then the other days, which the market cycle comes to an end on a Thursday, is where we can look to grab some more. But most of the stronger players, they enter from early as Monday, Tuesday, Wednesday, Thursday, and Friday, we wrap up. All right. So as it stands right now, price is below the overall equilibrium of the previous range that was made. So every single person who bought inside of this area, their stops are currently being run at this present moment. So we understand now from those who sell from this vantage point, let's put S for sellers, their stop losses are currently here, SL, right? And some went and put their stop losses above that area. So the sellers, let me type this out. I really want you guys to get it. Oops. Sellers. Right now, I have to go delete you and just directly type you out. Sellers. So the sellers on this current Monday sell-off move, they are currently in profit right about now. Now, what needs to happen is A. We have A and B options, two options, keeping it simple. Option A, the market price continues to wipe out the buyers who would have undoubtedly entered into this era, which would mean that the stops of those buyers from last week Friday, the market maker would be looking to run those stops. And that would confirm further selling. We would see price continue to break downwards. That is if market price stays below the 50 equilibrium area of the previous week range. Now, option B, now, market price upon this current sell-off coming to an end. Let me go on the 15-minute chart now for greater insight. Upon this current sell-off coming to an end, let's say, for instance, it sells to the next hour odd, or it stops. Because what's going to happen? Monday is going to set a low. Right now, this is the lowest here Monday has set so far, but the day hasn't come to an end. So I'm not going to draw a line there. It's now 11:26 a.m. right about now. So Monday hasn't come to an end. What I need to see happen is I need to see, provide that market price, when it does establish a low for today, the market price then stays and then begins to pull back, but I have to see price break above this equilibrium area and stay above it for me to confirm a buy off. Furthermore, there is an overall zone that has to be broken. We have to break past here and here. So there are two interference areas. So this was the high that was made from earlier. Let me mark this for you guys. I'm gonna mark where Monday start and I give you guys a quick look glimpse. Yeah. So this is the high that was made on Sunday, right? On the Sunday open. Just gonna draw one local line right here. So we're doing some we're doing some technical analysis right now, algorithm style. So this is where Monday officially start. So this entire block right around here, this is my Sunday range. Market price, let me pull this here, because this is gonna help me as a reference. All right, perfect. So, all right, perfect. I don't need to draw it out, but yeah. So I have my low and I have my high, my entire range in this block. That is what? Sunday, correct? I guess I can get rid of you now. Yeah. So this entire area right around here, very important in the grand scheme of things. I have to see market price re-enter back into this zone. I guess the 50 equilibrium line could really make it simple, but I want you guys to see step by step how the algorithm work. I have to see market price enter back into this zone and critically not only stay above the 50 equilibrium area, price has to break the Sunday opening high, the highest here that was established Sunday. So this entire zone in the grand scheme of things, this entire range, has to be taken out, which would then confirm to me that the sellers, the market maker, would undoubtedly, provided I see that, the market maker would be going after these stops, which would be one of the biggest confirmation for us to trade that yes, the Dow Jones Industrial is going to continue to buy. If you do not see that setup, it is not wise for you under any circumstance to place any long-term buy. If you place any buy while the bears are still in play, still looking to target the stop losses, and you buy, well, once the market price decides that, all right, I've got you, it's going to continue to run your stops, tag those, and then undoubtedly, once you become frustrated and emotional, you're going to end up making the mistakes of chasing it at the low. And then when market price does in fact decide to correct and shoot up back on you, you're going to be in a lot of trouble. We have seen this played out time and time again. So for those who are watching this current live stream right now, I implore you, wait on the confirmation to come through. Now you're probably saying, I missed the sell-off, what can I do? You missed the sell-off, no problem. It happens to all of us. Some of us see some good setups coming, we miss them. You have missed it, it's not the end of the world. Wait for the next setup, as I've provided in this analysis, to present itself to you, and then you're going to be on your way. All right, so that's it for the Dow Jones. Let's jump onto the Nasdaq at this present moment. All right, and I'm going to start on the daily chart for this one. Each time frame that you start on, you have to get at the core basics. Where's the market price going in terms of the market flow? The market flow being the true long-term direction. What is the market price currently doing at this area? And most importantly, where are the stop losses of those who have entered the market already? All right. My neighbor seems to be doing some, carpentry work. Sorry for the background noise, but all right. It's currently trending upwards. Easy, but that's not gonna make me make any money. What I need to do is know where the stop losses are and whether or not I can jump in on this market. So same thing, similar to the Dow Jones just earlier. I'm gonna have to gather some data. And looky here, there's a gap here right here, so that hasn't been properly filled. So I have to watch out for that. So first and foremost, let's speed this up. Let's go on the 1 hour chart. Full screen back again. Where did the previous week start from? Let's mark that out, shall we? So all the way, let's get the third and let's get Friday. All the way to the very last bit. Perfect. Now, similarity, yeah. We saw the same thing take place. Am I gonna do anything new? Nah. It's the same principle. Highest era from the previous week, lowest era from the previous week. You're gonna notice that assets that correlate to some extent, the similar markups can be made. You just have to wait for confirmation of every one of the moves. It's that simple. If you do not get a confirmation, do not take the move. So finding the halfway point, equilibrium. Just you guys starting to get the picture now. I know I'm gonna just quickly head on over to the 15-minute chart at this present moment. All right. So where's today? Let's find today. So right around here is Monday. Now, when I'm doing it this way, I want you guys to also pay attention to the characteristics of the candlestick movement. Notice I said, look at the characteristics of the candlestick movement, not the patterns. If you follow the patterns, you're gonna find yourself in a lot of trouble because the pattern is just, it's gonna drive you crazy if you follow the pattern. It's gonna really confuse you. So right around here, we have a, I wanna catch a Sunday. All right, I'm gonna do this one from the Sunday. I'm gonna use it from the Sunday principle. So I'm gonna basically give you a different color. So let's color you blue, yeah. And let's draw back this line and put you here and make you mark off as where Friday came to an end. And naturally color your back red again. So the blue area again represents the Sunday zone. This is where the Sunday open started. Now, right around here, I'm gonna just quickly mark out the highest area, market price made, and the lowest area. All right, perfect. So take a look now. Price made a bullish impulsive move. So these guys started off a Sunday deep in profit. So similar thing to earlier. Buyers here from Friday. Those who caught this on Friday, congratulations. You're living large right now. And now sellers here. Now who is in more trouble? The buyers or the sellers? Obviously the sellers are currently in more trouble than the buyers. Because why? The buyers them down here, they have ample time to exit the market and collect. The sellers know, those who sell here, their stop losses are in direct firing range for the market maker to come and tag their stops, especially those who sadly place their stop losses all the way here. Remember, this is the previous week high. All right, let's just put PWH, previous week high. Now, if this is broken, this is a direct confirmation that what? Buying is going to continue. But you don't want to catch it while it's in that zone. You're not waiting on the price to reach into this area to buy. You want to catch it from down here. But you have to see a confirmation. So this is the equilibrium, 50% equilibrium. So market price now has to stay above this area. So this one is looking a little bit better than the Dow Jones because the Dow Jones, let's go back on the H1 chart just to be sure. 1 hour. Remember, I have to navigate this good. I usually draw them freehand, but if you want, you guys can use a Fibonacci to assist you. So I think I have this look a bit, yeah, perfect. Yeah, still above 50% equilibrium. 15 minutes back again, perfect. So now that the market price has wiped out most of the persons who jumped in on the early part of Monday, what needs to happen? Simplicity. We have to see market price now do what? Stay above this area. And then this entire zone, I'm going to range it out. Let me use a trend line for this. 1, zone 2. Remember the day hasn't come to an end, so I'm just doing some preliminary markups at this present moment. This entire zone, market price now has to quote unquote fill it. And market price now has to do what? Break above the high that was established by Monday. That's it. Now, in terms of an entry, I enter on the M1 chart. As it stands right about now, this would have been a decent little sell to catch, but I wouldn't want to be, going for breadcrumbs. This is the move that would have been much more beneficial to catch, especially after such a wonderful sell-off. in the Thursday period, and then Friday came and started to give us this nice buy off going into Sunday. So that would have been better. But it stands to reason there's a lot of pips to begin on this should market price proceed to do what we are looking for it to do. Now, what I would advise all of you is wait to see if market price is going to stay above equilibrium. That's the first main and key thing. Every single impulsive move, whether it's a retracement or a pullback, there is a maximum area, or should I say a starting point, a equilibrium, and a max out zone. Everything is measured and ruled in the time price algorithm. Once you see the move has come to its expiration, meaning that it has stopped, it has done what it needs to do in terms of running liquidity, the move is either gonna A, continue in the direction that the market maker intends. Where we as forex traders come into place is we have to set our navigational blueprint on the chart in such a way, along with our psychology of the trading algorithm, in which we get a direct confirmation of where the market price is going. Do you understand? Let me elaborate. As it stands right about now, I see two firing lines, just as I discussed earlier on the Dow Jones. I see two firing lines for stop losses to get run. Notice I'm focusing on the stop losses more than the profit. It's because it's where the stop losses are, that's where the market maker is heading. Those guys who I said bought down here, they are deep in profit. So if the market maker is privy to take them out, mean that there's gonna be a continuation of a sell-off. I am going to see direct evidence of that via this area being broken and price wiping out, especially those who entered on the Sunday. Because those who entered on the Sunday open, their stop losses more than likely are a tad bit closer in the vicinity, right? So we have a grace period where we can see a little bit more selling potentially going on for the next couple of hours we're having today going into Tuesday, right? So that's scenario number one. So if I could hypothetically draw it out, so make into this, break, confirmation, rejection, look a bit more downside, you back some more pips. Now here comes the dangerous part now. The dangerous part comes into play that if the market maker decides that, look here, I am going to stop, not going to go all the way and run those stops at those buyers. I'm going to stop at some point and then start to correct. You don't want to be caught selling when the market price is definitely showing your correction, especially if it recrosses back this area. If it recrosses back this area, stays above it, well, those who catch this buy right here, they're on their way because you would be breaking above the median point of the previous week and you're going to be gaining complete confirmation at that point, provided it also takes out the high of Monday, that yes, price is going to continue to buy. You guys caught that? So that's the overall scheme of the algorithm. I don't know how simple I can make it. Once you see these parameters come into play, you can then jump on the M1 chart and place an entry. That is why it is important that you properly navigate and label your crucial zones on the chart, or else you're gonna be in a lot of trouble. All right, let's jump on gold. And gold has already been pre-labeled. I've been doing many of the markups on the vlog channel, so here we go. I might have to go post a link to the previous ones that I did. Alright, I'm gonna see now. Yeah, in preview. I'm gonna just post a vlog channel link in the description box below for this live stream so you guys can, continue. So let me just pull this over like so. Alright. So all of what we're seeing now, I'm gonna clean this up just a bit. Some of these guys serve their purpose. So you're gone, you're gone, you're gone, you're gone. One, two, three. A lot of you. Perfect. Now, in simplicity, market price has a couple zones it has to break past. I label these from my previous tutorial videos. They serve them purpose. Some of these I can't delete. Now look at what's happening at this present moment. The asset price, as I said, price has to break and stay above this price zone. So what we're looking at right now, we're looking at a direct push for price to do what? Continue to buy. However, wait, before I go on that time frame, before I do that, take a look Oops. Take a look at right here. You see this? I wouldn't be caught buying in this area. He has to break past all of this. This was a block where some serious battle took place. Alright? So the market maker has to break past that entire zone. So if you're caught, now I can go on the 1 hour chart now. If you're caught buying here, you're directly lining up yourself to get stopped out. There is a lot of guys that are currently on this impulsive move at this present moment. All right? A lot of traders. So let me just sketch Monday today. Let me just sketch Monday and show you guys what to look out for. I'm just gonna go right to Monday. What a nice little start we had, right? Decent little opening candle and so on. But price didn't really go anywhere. M15 chart. Price hasn't really gone anywhere. So I'm gonna set this directly where Monday started. So Monday, so that's the low. And right here, so this is the current highest area of Monday, right? Yes, I'm a bit lazy right now. So price has pulled back. And now price now is above a crucial zone that I marked. The area that price has to stay above, but it's so close. So similar to what I established earlier, let me just use this. As time goes by, many of you are gonna get more personal with how you label your charts in terms of, assisting you to better navigate. It's personal for all of us. So this is the current highest here. So this is the max out zone. Um, I'm gonna just put a goal line right here. This is the goal. This is the equilibrium area. As I said, the day hasn't come to an end, so I am free to now jump in back, adjust my lines. You get the picture. Nothing that is unforgivable right here. So I have room for forgiveness. All right, and right here, so is zero. Perfect. You're probably saying it's this simple. Yes, it is. Do not complicate your trading. And even if I do get complacent, as long as I go back to my formula, my mind and my understanding gonna be okay. So work with me now. Where are the buyers? Many of the buyers, their stop losses are currently in this area, and many of them have already been taken out. You don't see it? Let me show you the buyers. So I'm gonna label them differently. That way you can understand the different levels that are, operating. SMT, that's smart money buyers. Those who caught this move from earlier, they are the ones that are currently in profit right now and are still okay. Their stop losses are here. Those now who sadly retail trader buyers, they bought, I'm just gonna put RT for retail traders. They bought here, retail buyers. They bought inside of the impulse move and their stop losses were closer, so their stops have already been run. So the retail buyers have already been taken out of the market. So the current players that are safe are the smart money buyers, right? Now, many of them have also entered, well, I wouldn't say smart money, but let's say smart money scalpers. Smart money scalpers have already entered on this move, and as I'm speaking right now, I'm judging that a couple of them have already closed out. Sadly, retail buyers have entered at the top of these moves and have been stopped out constantly. Now, as I said, keep your eye on this zone, 50. We need to see price now take out this crown. The day hasn't come to an end yet. So we need to see price take out this crown, pitch and stay above it, and then ultimately keep on climbing so till we see take out the high. So I'm just gonna label this as continuation. And then I'm gonna label this as new gold high. Now, what did I establish earlier? The price is inside of a very crucial zone. So I'm anticipating some pullback. Back to the 4 hour chart. Back to the 4 hour chart. I got to show you. We have now entered inside of a zone where earlier buyers faced some strong rejection. Understand that market price went down, discounted, got a decent little impulsive move going on right about now. Those who entered from the 4th of November, they are exceptionally deep in profit. That's why I said for you swing traders, get it while the going is good. Now, at this present moment, as I said, I personally, I'm going to go on the 5 minute chart now. I personally would not be caught buying right now. I can literally feel the market maker gearing up to do one more look sell off. All right. Notice how these current stops have not been ran. Right. We're going to go look deeper right now. These stops have not been ran. So all of the guys who bought into these areas, them currently safe, but their SLs are close by. So those who bought at the top, they got ran. Like for right here, so these guys who bought right, so they're currently being ran. Now, if the market maker comes and touches anywhere in this vicinity and cannot get what he wants, I'm potentially looking for this. Potentially. If I do not see that play out, I am going to be cautious, especially at the new high. This is gold that I'm dealing with. There's a lot of guys that are deep in profit right now. So there's a good likelihood he's going to try to run those stops before he makes the move. My job is to make sure that I enter after the stops of the current players who have already jumped in, meaning the retail traders. Once they have been wiped out, that's when I'm going to enter. I have been trading Forex for quite some time and I'm tired of being stopped out or in the classification of a retail trader. So when I study these moves and see these moves, I wait for them to happen. I wait for the novice to get wiped out, then I jump in. I learned that from persons who are making a killing in Forex trading, and it's exactly that I'm putting back to you. All right, it's one big algorithm. This era has to be filled out. But notice who is present. Sellers are selling inside of the buy move. So the moment the market price comes up to any rejection, that's a critical zone, especially after the high of Monday. That's a critical zone that can line us up for one more big sell-off. All right. So I'm watching this area carefully. As I said earlier, the day hasn't come to an end. All right. So I'm watching this area carefully. Provided that I see the parameters that I'm looking for to come through, well, continuation and new goal high, right? But let's accept the truth of the matter. You caught it from Monday early. For today, you're good. But you caught it from last week, you're in a far better standing. So that's why I keep on repeating. It's all about time and price. Hope you guys enjoyed this tutorial. I got a lot more coming up. So please remember to subscribe, like, share. I'm gonna be streaming live more. All right. Looking out here in front of you guys.